Bank of America stock has been on a wild ride over the past year, and really in the past month, we can see they're down over 20% like a lot of bank stocks, and over the past year, they are down 35.35%. They're currently trading at $27.82 per share, which actually gives them a pretty nice starting dividend yield of a little bit over 3%. Now, we can't talk about Bank of America stock without mentioning Warren Buffett and Berkshire Hathaway. We jump over to a website called Dataroma, really cool website. I'm not affiliated with them, but we can see institutional investors' holdings. And we're currently looking at Warren Buffett's Berkshire Hathaway portfolio, and we can see Bank of America is his second largest holding, making up a little over 11% of his portfolio. And what's really cool is we can see they bought in at a reported price of $33.12. And again, that's interesting because the company is currently trading at $27.82 per share. Now, obviously, again, over the past month, there's been a lot of drama in the financial industry for obvious reasons if you've been keeping up with the news. The failure of Silicon Valley Bank has put fear into a lot of investors, especially people that are looking to invest into bank stocks. So obviously, like I already mentioned, there's been a huge sell-off because there's fear this could happen to more banks, but this is actually not necessarily a bad thing for a bank as large as Bank of America, and this is actually something I mentioned on my Twitter account the other day. We can see Bank of America received $15 billion in new deposits in a matter of days, one of the big winners after the collapse of lenders, including SVB. So that's actually a net positive for Bank of America that's giving them a lot more business, and I think this sell-off could be a little bit overstated as we can see over the past year. When you look at Bank of America compared to some of their comparable companies, the sell-off has been a lot higher. And I was reading this article on Seeking Alpha just a few hours ago, and you can see they actually mentioned the same thing. They recently brought in $15 billion in deposits, and there was also growing depositor confidence, significantly aided by the Fed's emergency rescue. So in this video, we're going to be jumping into my financial institution valuation model. This is a spreadsheet created for the sole purpose of valuing bank stocks and other financial stocks. So if you'd like to be able to download this spreadsheet, you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and plug in Bank of America stock and hit enter, and again, all of this data will automatically load in. We're looking at a 365-day change chart. Let's go ahead and zoom out and look at a 500-day chart, and you can see pretty major sell-off, especially within the past month, like we've already mentioned. But coming over here and looking at the dividend data, they're currently paying out 88 cents per share, which gives them a starting dividend yield of 3.16. It's been quite some time that Bank of America has had a starting dividend yield of over 3% and a nice low payout ratio as well at 26.8%. Analysts currently have a target price of $40.43. Institutional ownership around 71%, and again, obviously Warren Buffett is a shareholder of this company. Beta of 1.4, so this is definitely a company that is a little more volatile than your typical company in the S&P 500, and obviously within the past month, there's been a lot of volatility with this company. But let's go ahead and jump into our first valuation model, and that's going to be Graham's valuation model invented by Benjamin Graham in order to calculate intrinsic value. And you can see we're taking our earnings per share and multiplying it by our growth rate projection of 4. That's in line with analyst expectations. We then multiply that by 4.4, which is the average yield on AAA corporate bonds, and divide by Y, which is the current yield on AAA corporate bonds. And at the time of this video, this is sitting at 4.44. So while it is still pretty high, it actually has come down within the past week, which gives us an intrinsic value of $34.77. Now, moving forward, we want to look at a historical price to tangible book value. And this is actually a really important valuation model for bank and financial stocks because it's going to value it compared to where it's been trading at historically. So essentially, you can see over the past decade, I've been plugging in the share price and plugging in the tangible book value per share. And this allows us to see our historical price to tangible book value over the past decade. And we also have that data currently. So we can see the current price to tangible book value is sitting at 1.27. And I know Warren Buffett has stated before that he typically looks for bank stocks that are close to 1.00. So it is getting closer to that number. And if you look at the past 5 years or so, it has been a little bit above 1.5. So it's definitely come down quite a bit. This is the lowest it's been in about 5 years, which is actually a pretty good sign that is trading a little bit under value. Now, moving forward, let's go ahead and look at our multiples valuation. And essentially all we have to do is plug in these stock tickers right here for comparable companies to see how the market is valuing them. And you can see that data will automatically load in. We take their stock price, divide by their earnings per share to get their price to earnings multiple. We take that average price to earnings multiple, and we multiply it by Bank of America's earnings per share, and we come to an intrinsic value of $35.79, pretty close to what we got for Graham's valuation actually. Now moving forward, let's look at our last valuation, which will be our dividend discount model. And essentially what we're doing is we're valuing the company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the quarterly dividend payments for this company for the past 5 years. This allows us to see how much they pay out each year total per share. And then more importantly, we can see our year-over-year dividend growth rates. A really nice dividend growth rate here of 20%. No growth right here, that was probably in 2020. A 16.6% dividend growth rate, and then a 4.76. So overall, pretty decent dividend growth. Obviously, we want to see consistency, which they didn't have here, but that's pretty much standard for all the bank stocks in 2020. But overall, average growth rate of 10.36. Moving forward, I'm projecting a growth rate of 6%, which I definitely think is sustainable, especially when you consider the fact payout ratio only sitting at 26.8. So discount rate of 9%, and that gives us a dividend discount model price per share of $31.09. So when we jump over to our output tab, we can see the 4 valuation models we performed. Graham's at 34.7, multiples at 35.7, dividend discount model at 31.09, and the current price to tangible book value is sitting at 1.27. And again, I think that kind of reaffirms our other 3 valuation models, because we can see compared to where it's been for the past 5 years, it is quite a bit lower and starting to get closer to 1.00, which I think is a great value for most bank stocks. So when we average these 3 together, we come to an intrinsic value of $33.89. The current trading price for this company, $27.82. Let's say we apply a 20% margin of safety. You can see based upon that, it's not quite within our acceptable buy range, but it's starting to get very close. With a 10% margin of safety, our acceptable buy price is $30.50, meaning now could be a good time to consider adding this to your portfolio. I actually already have a little bit of Bank of America stock in my personal dividend portfolio. I'm a little bit down because of the huge sell-off that we've seen over the past week, but I think the company at this price is pretty decent. I'm actually not planning on adding shares right now because I already have a lot of exposure to the financial industry, so I just don't think it's wise at this point to consider adding it. But if it continues to drop, it's definitely going to be a tempting move to make in my personal dividend portfolio. But there you go, there's an analysis on Bank of America stock. Go ahead and let me know if you own this company in the comments down below, or if you plan on buying or selling. If you'd like me to download this spreadsheet, you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.